Hi, welcome. The midterm election in the United States has just ended, and we are in a divided government. The Democrats have won the Senate, while the Republicans have control over the House. So what does a divided government mean for the market? And how does that affect your current and future investments? The market prefers a government that is balanced between two major parties. This is due to the fact that a divided government increases the likelihood of gridlock and limits legislative action. Republicans in the House are signaling their control as a bargaining chip with the Democratic president. This could make it difficult to pass major legislation. However, this type of government is typically beneficial to the market because of it.
I think the midterms are a huge catalyst in the near term, right? The midterms are always a source of volatility. And as it gets closer to the polls, you start to get more of an expectation of who's going to win. And, you tend to find a market that does better. The stock market does better in a divided government. And it looks more and more like we're moving in that direction. And that's a net positive for the market. And so I do think that once it's decided, once the uncertainty is over, midterms are done, I do think that stocks should take off, at least in the short run, although there's certainly a lot of headwinds for a lot of other reasons. I do think the midterms matter.
Tight races between very different candidates represent the greatest uncertainty. However, regardless of who wins, the stock market generally rises when things calm down. Elections appear to have little direct influence on stock markets, and it's often difficult to distinguish between normal market ups and downs, and attribute any movements directly to election results. When voters strongly favor one political party over another, they develop a bias toward whatever they do as being correct. If their party has a bad election night, they withdraw from the markets, because they believe things will worsen. In fact, they are leaving at a time when market uncertainty is decreasing, which the market prefers. Panic selling, because your favorite politician or political party did not win or dominate, will most likely harm your investment performance, due to the time you spend out of the market. Markets typically rise in the short term following midterm elections, and missing even a few of the best market days in any given year can completely devastate your overall returns. For instance, the S&P 500 had an annualized return of 9.2% from 1993 to 2013. However, if you had missed just 10 of the best market days during that time period, your annual returns would have been cut in half, or 5.4%. You may wonder why the market would rise. The reason is, this divided Congress is unlikely to produce anything controversial. This means that the current fiscal policies will be maintained. For the next 2 years, there will be no tax cuts or major legislation. This gives the market some certainty about the economy, which is a good thing for the market. Historically, a Republican Congress led by a Democrat president has provided the best environment for stocks, with the benchmark S&P 500 Broad Stock Market Index returning 16.3% annually between 1950 and 2021. A divided Congress, led by a president from either party, sees the S&P 500 return above the average annual return of 13.6%. Stock market volatility, such as on election day, may scare some investors into selling. That could be a mistake. Vanguard's research, which dates back to 1860, discovered that a portfolio comprised of 60% equities and 40% fixed income performed roughly the same whether a Republican or Democrat was elected president. Long-term investing success does not rely on short-term market developments. Instead, having a well-balanced, diversified plan that you hold for the long term is more important. Analysts examined Bloomberg stock market data from the previous 60 years, including 15 midterm elections, and discovered that the S&P 500 has historically outperformed the market in the 12-month period following a midterm election, with an average return of 16.3%. So, is it safe to bet on a stock market rally following the election? Post-election market performance is frequently driven by the market's expectation of increased government spending from a new Congress. However, given the government's historic levels of spending and stimulus in response to the pandemic, an additional infusion of funds appears unlikely this year. Massive government spending over the last 2 years has contributed to 40-year high inflation, and any new spending could exacerbate it even further.
So why you care as an investor? You've got two bills, the CHIPS bill, which supports obviously semiconductor industry, and then this Build Back Better inflation bill, or whatever you want to call it. Nobody believes it's an anti-inflation bill, but these are probably, if you're an investor, the last two policy implementations this administration is going to ever get to do, because if they lose seats on the Hill, it breaks the gridlock. And of course, at the end of the day, that's fantastic for investors, because we're now into nothing gets done in Washington for 2 years. And we probably need a breather. There's been so much spending, so much stimulus, so much printing of money, and so much inflation that it's time to stop. And the market naturally likes it when Washington can't do anything. And I think that's what's going to happen. As an investor, I'm betting that this administration gets shut down in terms of just the ability to put new policy in place. And that's a good thing.
Although the market may fall in the immediate aftermath of the election result, it usually stabilizes within a few days. The market considers the potential impact of various political decisions, which frequently results in positive stock performance. Elections are stressful times, and markets are volatile during this period. It might be a good idea to unplug from social media for a few days. It's unlikely that you'll miss anything significant, but it will save you a lot of time and stress. If you liked this video, please subscribe to the channel, leave a like, and comment on your post-election investment plans. Thank you for watching.